Macy's in a gap being forced to furlough employees because these large retailers, well, they borrowed money through corporate debt markets, and they're not eligible right now to get help from the Federal Reserve. The central bank's efforts, they aren't designed, what they say at least, to bail companies out, that even if they may go under. Of course, these companies are struggling long before the pandemic hit, and yet they want to tap into new stimulus programs and have them created either by Treasury or the Fed. I want to bring a Walser Wealth Management President, Rebecca Walser, to give her thoughts. You know, Rebecca, the Federal Reserve has done a lot. Stephen Mnuchin has worked with them. They're doing things we've never seen before. They've been creative. Should they actually also, though, be in the business of picking winners and losers? And if so, should they turn their backs on the retail industry and the millions of people that work for it?
You know, Charles, that's exactly the problem when you do start picking winners and losers, right? Because you upset the people that you don't pick and you make the people that you do pick happy. But as we've seen over the last, 5 years especially, the transition from brick and mortar to retail online is really what's exasperating our, brick and mortar retailers, with the exception of the big names that are really weathering the storm well, like Target and Walmart. So Macy's is one that is being obviously clearly affected. And I'm not a big government interventionist. I know that we obviously had to have stimulus. This is an unprecedented situation. But I am not for picking the winners and losers. I think that is not going to work out well.
So today we've got cruise lines are leading the way again. Oil stocks are up big. For a moment there, some restaurants' names were up. And listen, tomorrow Carnival Cruise Line is going to try and raise $1 billion on its own. We'll see what the markets do. If there's a private sector reaction and people buy those bonds, maybe the U.S. government or the Fed won't have to step in. But it's pretty clear to me on some of these trading sessions that phase 4, many people believe, will include a bailout for cruise liners, a bailout for retailers, and some other things. I mean, should it come to that?
Well, Charles, I think there's ways that can be structured. We do need some sort of interim help, okay? That's a different thing than a bailout, right? If we can structure some kind of interim help to get these industries that are hardest hit, obviously entertainment, cruise lines, airlines, restaurants, hotels, if we can get the travel industry sort of stymied to protect them enough to weather the storm, and then we can, I don't know exactly how we could finagle it, but if we could get something that was temporary enough that could be undone or paid back, which is the key, right? Once we actually help them to get over this situation, because these are profitable companies during normal circumstances. So we're not talking about losers that are just, we're trying to save an industry that's dying. These are profitable businesses, and they are really great for the American consumer and the American economy. 70% of our spending is on retail and fun stuff, so we need to save these things. But I don't think we need to do a bailout which has the American taxpayer on the hook. We're not going to like that a year from now when these people are profitable again and we have paid trillions and trillions of dollars. That's not going to make anybody happy. So there's got to be a balance.
I think the word you use, finagle, they're already using that down in Washington, D.C., so maybe they'll come up with a solution. I'm not saying we'll like it, but they'll come up with one. Rebecca, thank you very much.
Thank you, Charles.
Meanwhile, folks, the media